Good morning and welcome to Payroll Today with Ahola. This webinar series will cover trends and topics that affects the entire payroll space when they happen, with the intention that all of our viewers are better educated. Today's discussion is all about preparing for tax season and quarter end. I can't believe it's already that time of the year. So many of us have so many things going on and so many daily responsibilities that we may not be ready. Ahola is here to put these yearly events on the forefront so that we are all well aware and prepared. My name is Oscar, and I will be the one to host the discussion today. I'm the Learning and Development Department Manager for Ahola. I've probably been with Ahola for nearly 7 years, and I bring a total of 10 years of payroll experience. Please feel free to reach out to me by emailing omahia@ahola.com with any questions you may have regarding today's discussion. I will be happy to work with you and your dedicated payroll specialist to answer any questions you may have that is related to the system or our services. Before we begin, I'd like to remind you that we are not attorneys. This session is intended for educational and informational purposes only. We do hope that you find these presentations helpful and informative, but the information presented today should not in any way be construed as legal advice. As always, if you have questions about how this information may affect your business specifically, we recommend that you consult with your business advisor. For those of you who may not know about Ahola, we are a family-owned payroll and HR service provider headquartered in Brecksville, Ohio, with 55 years of payroll, tax, and HR experience. We've served over 10,000 small businesses nationwide. Ahola offers a full range of payroll and HR services and software. Today, our staff of payroll, tax, and human resource professionals serve thousands of businesses by helping them with their human capital management needs. So the agenda for today is as follows. We will make aware the income tax deadlines, as well as what to do if an extension is needed. We will also address that we review the FUTA and SUTA limits and what that means. Finally, and most importantly, we will give tips and offer guidance as far as what to review before you end the quarter as an employer and or a partner of Ahola. Tax filing deadlines. By now, everyone should have access to their W-2 information. For compliance, employers were responsible for providing W-2s to all employees by the end of January. For the individual, we all must file either our return or our file to an extension by April 15th. If an extension is granted, then people will have till October 15th, 2024. Filing an extension does not guarantee that it will be granted. So please allow yourself ample amount of time to file. As employers, you do not have liability over when your employees file. Any inquiries by the employee must be handled within the filing deadlines. We tell you this so that you can provide guidance to your staff. Again, you are not liable as the employer if an employee acquires a penalty for late filing or filing their tax return with errors. Since the beginning of the year, employees will continuously seek out their W-2s. Even though we are in March, this will continue well into April. For compliance, employers are responsible for providing the employees with their W-2s by the end of January. This can be provided by offering a physical document or be made available electronically. iSolved offers most documents to be made available electronically. From onboarding documents like the Form I-9, W-2s, 1095-Cs when it comes to ACA filing, and even updating company policies like your employee handbook. No documents will be purged or deleted due to our solution's cloud-based capabilities. We can eliminate paper and allow all employee information easily available from the mobile app. However, employees must authorize the system to produce and store these documents electronically. Employees must also consent to the system creating electronic signatures for those documents that may require acknowledgement. This can definitely be a culture shift, but absolutely a conversation worth having. As long as your employees have an accessible email address, they can access all of their forms, payment history, and even vacation balances from the comfort of their smartphones. Employees can still decline. Documents will still be produced physically and shipped to you, the employer. Those that receive physical documents from Ahola are subject to delivery fees. This is worth mentioning due to the employees having accessibility to their W-2. Employees that decline electronic signature consent or decline electronic storage, that would mean that you, the employer, would be responsible for producing and delivering a physical copy of the W-2. Terminated employees can also have access to their W-2s. When terminated, the electronic access to these forms would temporarily be disabled. That terminated employee would have to reconsent to these services in order to retrieve that electronic form. Again, if a terminated employee declines consent to the system, as the employer, you're responsible for providing a physical copy to that terminated employee. We're just going to briefly cover the FUTA, which is Federal Unemployment Tax Act. For unemployment taxes, FUTA will stand for Federal Unemployment Tax Act. The federal unemployment tax is set at 6% on the first $7,000 of wages per employee. This does not include any potential tax credits given to employers. Any potential tax credits will have to be applied separate to this rule. Now, SUTA operates a little differently. SUTA, State Unemployment Tax Act, the rate will vary by state. Each state will have a set wage base to calculate the tax on, but the actual rate depends on a number of factors. Normally, this rate is provided to each employer by mail. Please make sure that if you are a partner of Ahola, or if you're a partner with any other service bureau provider, that your provider or Ahola has received the updated rates. There's still time to make updates and adjustments before anyone files on your behalf. Failure to do so may lead to adjustments and amendments to your Q1 reporting, and you may be subject to fees. Being subject to fees for adjustments and amendments will be a common theme for today's discussion. That takes us to the quarter end checklist. Things that we would like you to review prior to Q1 ending. The first thing is to make sure that all earnings are accurate in the system. Think of all the ways you pay your employees, issuing out bonuses, commission payments, even 1099 earnings for independent contractors. It is very important to stay on top of everything as opposed to playing catch up in a later quarter. Most earnings, unless they are reimbursements, are generally taxable. So the recording or forgetting to record earnings will affect taxable wages and therefore the actual tax amounts. Even think about situations where a check was handwritten to an employee. That too should be included in payroll records. Now, why is this important? It is imperative to report all manual checks as they are issued because tax liabilities are based on the date the checks are issued to the employees. You want to keep your organization in tax compliance by reporting all payroll wages and taxes as they occur. Checks that need to be voided should be submitted as soon as possible to reduce the need for amended tax returns. Voiding a check from a previous quarter often requires amended tax returns, especially if the employee is no longer receiving wages in the current quarter. Deductions also need to be in place and accurate in the system. Is this a pre-tax or a post-tax deduction? This will affect total taxable wages for your staff. Again, making corrections after we file the quarter will involve adjustments and can cost companies various fees. Another thing to consider are work locations. Work locations directly affect taxes and the percentages at which these taxes are applied. Those that track labor have many project locations that are added and removed frequently. We will need accurate information so that the system can calculate all of the various work location taxes that coincide with your projects. Verify that state and local work taxes are being generated for the correct agencies. Now, why is this important? If an employee's work location is incorrect, this can cause state and local taxes to be paid to the incorrect agencies. If you need to correct state withholding or unemployment taxes or local withholding taxes after the returns have been filed, this can require amended tax returns and possibly late penalties and interest for remitting the taxes to the correct agencies. Your payroll company may also charge additional fees for filing amended returns. If companies grow and decide to operate in new states, for example, hiring a sales rep to cover a region in a new state, you may need to file for a tax ID for that state. Without a tax ID in place, service providers won't be able to remit those taxes, as we have no way to remit the taxes on your behalf. This is especially important for remote workers. Do your remote workers operate at their home 100% of the time? Is there a remote to in-office split? We can configure these situations in our system for you. Now check to make sure that your employees' home addresses are accurate and up to date. This is important because certain tax withholdings are based on resident locations, such as Ohio City resident taxes, Ohio school district taxes, and even Pennsylvania local taxes. Incorrect home addresses can cause incorrect tax withholdings. If you need to correct these taxes after tax returns have been filed, this too can require amended tax returns. Social Security numbers. Let's confirm that your employees' Social Security numbers are correct in the payroll system. Now, why is this important? Quarterly state unemployment wages are reported for each employee using their Social Security number. If wages are reported under an incorrect Social Security number, this can cause problems for the employee in the event they need to file for unemployment assistance. In addition, if you need to correct state unemployment returns after the tax returns have been filed, this too can require amended tax returns. Although this item does not apply to all employers every quarter, this is important. If you have any employees that are receiving short-term disability payments or long-term disability payments from your insurance company, watch for the quarter-to-date statement from your insurance company and forward this to your payroll company. Now, this is important because based on the agreement with your insurance company, you may need to pay employer Social Security, Medicare, federal unemployment, and state unemployment taxes on the disability payments. You want to keep your organization in compliance by remitting these taxes as they occur. It also helps your payroll company to ensure that all disability payments are recorded correctly in the payroll system. By reviewing this information each quarter, it will help to ensure accurate Form W-2s at the end of the year. Now, we have encountered this situation as of late and felt that it was worth mentioning. As companies grow and change, they may want to change how often they pay their employees. This is called their pay frequency. Going from a weekly to a biweekly frequency, or vice versa, can alter pay amounts. An annual salary can go from 26 pays per year when paid biweekly to 52 pays a year paid weekly. So the amount per pay needs to be adjusted. The same situation applies to various deductions that you have for your company, or having a deferred compensation plan or benefits package. That too will need to change. These can be pre or post-tax deductions, and that can alter taxable wages. If these amounts are not adjusted, your reporting may be out of balance at the end of the quarter. Just like the other situations, other items in the checklist mentioned earlier, adjustments or prior quarter amendments may be required. We absolutely have additional resources if you access ahola.com, utilizing the various blogs that we have available. We have many free compliance resources. We have previous webinar recordings, paycheck calculators, and more. So please, if you have extra time, please go to www.ahola.com to access those resources. Thank you so much for joining today's session. If you have any questions about our services, please feel free to reach out to me, Oscar, by emailing omejia@ahola.com. We hope that this session was informative, as our intent is to keep you aware of the changes and trends that happen in the payroll space. Again, thank you for your time, and I look forward to speaking with you all very soon. Please enjoy the rest of your day.